What does the government's takeover of AIG mean for the rest of the insurance industry and their investors? Well, for more on that, we turn to Marc Racicot. He's the president and CEO of the American Insurance Association here in Washington. Also, of course, the former governor of Montana. Governor, welcome. Thanks for the time.
Thanks, Peter.
Appreciate you joining us. And your reaction to this AIG news. It's been the talk of Wall Street, the talk of Washington. How about within your industry?
Well, it's clearly an item of extraordinary interest. Obviously, AIG has significant property casualty and life insurance operations, and obviously we keep track of everything that's going on within those worlds, and so all of the developments, of course, have been matters of great interest. We've known, of course, from the beginning of those discussions that the solvency of their insurance operations was safe and sound, because they're very strict requirements and they're monitored by regulators all across the country. And as a consequence of that, we knew that they had the capital and reserves that were available to make certain that their policyholders were properly addressed. But
and let me just jump in right there. So you would argue, and others have made the same case, that this was not an insurance issue at AIG. This had more to do with the more exotic financial products that many insurance companies have gotten into on the side.
It's related to the subprime crisis. And, you know, frankly, there are some who argue that, in fact, what they were providing as a product, mainly dealing with credit and default swaps, is a form of insurance, but it's an unregulated form, if it is insurance at all. That it obviously is not regulated at the state level, and it was never regulated at the federal level either. And that's with the meltdown of the entire mortgage banking system in so many different ways, that subprime crisis ended up impacting them and providing liquidity problems that didn't allow for them to convert assets as rapidly as they needed to make certain that they could cover those swaps.
Yeah, let me ask you about that, because the New York, the regulator for the insurance companies in New York, Mr. Denal, I heard him talking today about this issue, and he suggested maybe it's time for insurance companies to refocus on the issue, on the areas of insurance, their core competencies, so they don't get into this kind of trouble. What would be your industry's take on that? Is it time to reassess that?
Well, I think every single company has its own business plan, quite obviously, and AIG is quite unique in its global reach, with 116,000 employees and operating in 100 different companies with a very, very expansive portfolio. And clearly there's some diversity within the investment portfolio of a number of different insurance companies, but they're largely safe and sound investments that are designed. They're not these exotic, traditionally have not been these exotic investments, newly invented derivative instruments that are mysterious and not everybody completely understands every single time that they encounter them. So there's an emerging economy here that also is a part, I think, part of the challenge and difficulty can be attributed to that. But those portfolios are important to generate assets so that you have the assets available to make good on the claims that policyholders ultimately have to make in times of trouble.
We've been hearing from lawmakers both sides of the aisle who say that there's a consensus here. The regulatory whip's going to be coming down no matter who the next president is, the next Congress. First of all, are you worried about that in any sort of way, and perhaps what might happen to insurance companies beyond AIG who have to feel the brunt of that?
No, I think we welcome the regulatory review. Quite honestly, from the very beginning, 150 years ago or more, property casualty and life insurance companies in this country have been very strictly regimented and regulated at the state level. The problem for us, of course, is that
you've been trying to change that.
We have 56 different regulators, and that's fine for a lot of companies, but we would like to see the option available to some companies who operate nationally or internationally, and also so that we can enter into trade agreements with other countries, have a regulatory option that allows for the federal government to be engaged in providing that regulatory oversight. And these instruments that are causing the difficulty here for AIG were not regulated at the federal level or at the state level. So we know
under
that there's going to be
federal umbrella, as it's been proposed, I know you and I have talked about this in the past, would those products have been regulated by the federal government? Would the insurance world have expanded to include that?
Well, it's been argued that they are a form of insurance, but obviously they were not perceived universally to be a form of insurance because they weren't seized upon as an object of regulatory control at the state level, nor was there any direction given in that regard at the federal level either. So there's really, this is, I think, a reflection of a very rapidly emerging planetary economy combined with the lightning quick speed of internet commerce and the failure for couple of decades to really take a look at the regulatory framework and of the entire financial services sector. But we welcome the inquiry because we think it'll provide a very, very strong imperative for Congress to look at providing an option for some companies to be regulated by the federal government. If you think about it, Peter, it was only when the federal government got involved that they were able to bring about a solution to deal with this extraordinary potential financial calamity. And in some instances, that's just because of how things have evolved with our planetary economy, how we're going to have to move in the future.
All right. Governor Marc Racicot, the head of the American Insurance Association here in Washington, thank you for the time. I appreciate it. Certainly going to be an interesting time for the insurance industry as well, for most industries coming out of all this. Coming up next, a week ago, is the fourth largest U.S. investment bank today, Lehman Brothers.